Uh, Good morning. I'm Howard Klein, partner of RK Equity, based in New York. And today we're going to give a presentation on Terafactories and lithium geopolitics. I thank you very much for inviting us. MINEX, my contact information's on this slide. I have been advising, investing, raising capital, and researching lithium companies for the past 10 years, and largely for the past 20 years have done broader resources. These are a list of our clients. But today I'm going to focus on how to create a secure, sustainable lithium supply in the European area as well as the United States, which is becoming increasingly important as the world is significantly reliant on chemicals and minerals processed in China for the entire lithium-ion battery supply chain. There's a lot at stake here. There's an EV revolution disrupting Europeans' auto plants. Here is a list of 263 plants in the EU and the UK, and you can see Germany, France, UK, etc. It's a very big issue. COVID-19 is actually looking to accelerate the EV battery metal thematic. There was a question a couple of months ago as to whether or not this would slow down. This year, things will be slow. We're in a recession. But looking at 2021, 2, 3, 4, it's more likely forecasts will be the same or faster for EV take-up, in particular in Europe. In the USA, paranoia about reliance on masks and PPE has also translated into mineral supply insecurity for critical minerals. It was already existing, but it's even further kind of exacerbated. And that's going to be taking root even more so if Tesla builds, as they have been forecasting, terafactories in Texas and elsewhere. Lithium, I wrote recently, is a noble investment pursuit. So I'm going to focus my discussion here on lithium. There's a number of chemicals that go into batteries, but lithium is my focus. The lithium-ion battery is a 30-year overnight success. These three gentlemen won the Nobel Prize. But the market for lithium is very small. It's secretive, it's nuanced, but it's in a ludicrous growth mode. It's going to grow from about $3 billion in revenue to 20 to 30 billion in revenue. That's 7 to 10 times over the next 10 years, as the lithium-ion battery is the killer app. Everything that's in your laptop and your phone and power tools, it's now become sufficiently cost competitive that gigafactories and terafactories are now going to be built to power the EV, solar, and wind energy transition. These are all the battery plants currently planned or in construction in the EU. All of these plants demand lithium hydroxide. So there's lithium carbonate, lithium hydroxide as the two main products, but most of my presentation today is going to focus on hydroxide, which is much more prevalent in Western markets compared to carbonate in China. This is a list of battery plants that we put together for the US. US OEMs are demanding lithium hydroxide. Lithium hydroxide is currently about 1/3 of the overall lithium market. So it's about 100,000 tons, and only 60 of those 100 are for batteries. Lithium hydroxide also goes into lubricants. But within 8 years, we're forecasting that to reverse. So it'll be 2/3 nearly hydroxide in 2028, and that's a 40% CAGR, from about 60,000 tons this year to to about 1 million tons or 800,000 tons of the market, in just 8 years. Albemarle, the world's biggest lithium company in America. If you look over here on the left, lithium, what's highlighted and also in red, these are all lithium hydroxide chemistries. So legacy chemistries is NCA. That's what Tesla uses, but in advanced, all those highlighted in yellow, NMC, 622 and NMC 811, and others are using hydroxide. China's Ganfeng is a major supplier now to Volkswagen and BMW. Their supply announced in April of last year for VW and in December of last year for BMW. They're basically saying buying lithium hydroxide from China's Ganfeng is their supply security and it's also sustainable. Sustainability is critically important, and they're saying that the hard rock lithium mining in Australia, that is the source of Ganfeng's feed converted in China, is secure and sustainable. I would question, 100% reliance on any supplier in China on security, but that's what they're saying because that's what the current market is. RK Equity is forecasting a shortage of hydroxide within 18 months. Right now, the price of lithium is varied. There's high prices for hydroxide, lower prices for carbonate, but the overall narrative is one of lower prices, which is constrained investment. This is going to lead to a significant shortage in hydroxide in particular, and a price spike in our estimation within 18 months or so. Today, battery quality hydroxide is produced, really by three players: Albemarle, Ganfeng, we discussed, and also Livent, which is a U.S. company. People think of SQM as part of the big three, and they are from a total quantity of lithium produced, but they're not really a player in the battery qualified hydroxide market. They're selling lower quality product from there. 80% of the electric vehicle hydroxide is processed in China. Again, this is kind of Ganfeng and some others from Australian hard rock as well as Albemarle, and the rest is from Carbonate in Livent. Of the remaining 20%, 15% is processed in North Carolina by Livent and Albemarle, from South America or Nevada brine. In general, brine carbonate is harder to scale and also more expensive to convert into hydroxide, than hard rock is. Some countries in Japan and Korea and Australia and Russia are actively building conversion capabilities. They're currently small and to be determined the quality level. And some new technologies in clay and brines are experimenting with hydroxide flow sheets. But I see great potential in the EU and in America, in particular in Germany, Portugal, and Spain, and then in North Carolina, South Carolina, and some on the West Coast, to develop into chemical to cathode hydroxide hubs. It will require a lot of capex by the standards of this industry, but not by the standards of, let's say, the oil industry, which spends about each company spends about $25 billion a year on capex. The industry needs about $30 billion of capex over the next 8 years to build 50 new 20,000 ton hydroxide plants. Again, I'm just focused on hydroxide, not carbonate. And that equates to about $34 billion at a average $600 million a plant for 20,000 tons is a $30,000 capital intensity. So on average, $4 billion a year. That's not currently being spent this year, or forecast to be spent next year, and hence why a shortage is likely to happen. Again, I talked about the price of lithium, is being varied. The headline number is the spot price for lithium carbonate, not hydroxide, and this is currently in abundance. There is a bit of an oversupply. China changed some of their subsidies last year. The trade war had an impact, and now COVID-19 is having an impact. The price of lithium carbonate is resulting, it's below the marginal cost of production, and companies like Ganfeng are currently losing money at below $5,500 a ton. It's a question: is lithium is it a commodity or is it a specialty? What will the price be? Will the future of lithium carbonate or lithium hydroxide look like oil volatility or copper, iron ore, nickel volatility? Or will it look more stable like Benchmark Minerals, a price reporting agency, is suggesting after this period of up and down, it'll level off into more stable pricing, with hydroxide having a $1,000 premium to carbonate. I think that price will be wider than that over time. But a big question is, where's it going to settle? Is it $10 or is it $14 a kilo? And what's the right price to incentivize new supply? Morgan Stanley has been one of the biggest bears on lithium, and they've rightly called a price crash of carbonate, but they haven't really differentiated between battery quality hydroxide and commodity carbonate, that the spot market, which the price that I just showed you, from their loudest voices out of Chile and their macro analyst. But a couple of weeks ago, their China analyst, and I'm quoting and taking pictures from that report, is showing they're forecasting lithium hydroxide prices for Ganfeng to be in the $10 to $12.50 range, which is 80% higher than they're forecasting the China spot market to be. So they're differentiating very significantly for that. And that's as a result of those contracts with Volkswagen and BMW. And I believe those prices are actually lower than what Albemarle or Livent would charge. In part, this is Ganfeng trying to gain share with prestigious, tier one customers. And I think there's scope for them to raise those prices. And likewise, Albemarle, they have 37% EBITDA margins now. That's down from like the low 40s EBITDA margins they had a couple of years ago. And that's because their business still is 40% non-battery. And that's kind of weighed down the price in the short term. But as energy storage, which is circled here in the right, grows from 60% to 80% of their business, they're going to have pricing power in hydroxide, and I believe their margins will go into the low 40s once again. This is a chart of the current price of China exports to South Korea. These are largely battery quality lithium hydroxide produced by Ganfeng and Albemarle. May numbers trading at 14,500. Now compare that to the China spot market for carbonate of 5,500. There's a very wide variation in terms of quality and in terms of product, hydroxide versus carbonate. Okay, so I've been focusing a lot on hydroxide, but there's been a lot of hype lately about an LFP resurgence, as cobalt-free batteries by BYD, CATL, and S-Volt have come into the picture, and these take carbonate, not hydroxide. So I've been painting a big picture for hydroxide. I still believe, RK Equity believes, that LFP cathode will largely be a China story, made in China. China's focused on price, less on range. LFP performs poorly in cold climates. In a couple of years, solid state will be more relevant. So, exported China electric vehicles with LFP may gain some market share in the EU. I don't think they'll be anywhere in the US, but the low Chinese EV residual values will limit sales. And actually, some of the improvements that have led to this LFP resurgence, are cell-to-pack technology. These improvements will also be applied to NCM cathodes in time. So we believe this is short-lived, mostly China, but it might benefit SQM, which is struggling with, battery quality hydroxide, because they make carbonate, and LFP's battery quality, is not the same as battery quality in Korea and Japan, according to a leading lithium expert. So how do we create a secure, stable supply, for hydroxide hungry, EU and the USA, right? Today, the problem is, an impending shortage is happening because there's not enough investment going into the space. And the reason there's not enough investment is because the OEMs have a lot on their plate. They're largely deferring to their suppliers or relying on China, or they're hoping Australia and Quebec will succeed. But that's not going to be good enough. I think the auto OEMs must underwrite or guarantee, $12 to $14 or $15,000 incentive price floors to make sure that there's enough lithium. Either they need to do this themselves, or they need to partner with their battery and cathode makers by investing in integrated mines, or unconventional brines and clays to hydroxide, or by financing, a bit smaller money, hydroxide only processing, where they would warehouse and then merchant convert technical grade carbonate, or they would warehouse and then merchant convert, 6% spodumene. I believe I mentioned them earlier. Hydroxide hubs should develop in Central and Southern Europe. Germany is having a project, by AMG converting Brazilian hard rock, to lithium hydroxide. And then in North Carolina, which is already producing 15% of the world's lithium hydroxide currently from brine, they can process it from hard rock at Piedmont, and imported from other locations there. And in the West Coast of North America, there's a number of projects, clay, searlessite or geothermal and some in one in Alberta, that's partnered with Livent. I believe these will become hydroxide hubs, enabling a closed loop, sustainable, secure, from mine to chemical to cathode to cell to battery pack, to EV to recycling, all within America or North America and within Europe. Where to invest? This is a page from my bi-weekly newsletter, the Mr. Market Scoreboard. I track all of the projects in lithium, both public and private. And, every month, this is the share prices and some comments. So you can, check us out on libull.com and listen to our podcast, Lithium-ion Rocks, for more information. Thanks very much.